Hey everyone, welcome to administering solo 401k plan for IRS Form 5500 EZ. So this will be a nice and important live, I think 30 to 40 minute presentation on what you need to know if you are required to complete a Form 5500 EZ for your solo 401k. So what I'm going to do is I have a presentation, I have a form, so we'll go line by line so you know exactly what you need to do to complete the Form 5500 EZ. And then I'm here for questions. So I hope that we could tackle the subject in about 30 or so minutes, and then I'll leave 10 or 15 minutes for any questions, so feel free to post questions. Try to keep them related to the solo 401k and the 5500 EZ form if you can. If you got other questions, I'll try to answer them, but this presentation is really focused on IRS Form 5500 EZ. So I'm just going to get started and let's have some fun. So Adam Bergman, that's me. I'm the founder of IRA Financial. I'm also a tax attorney, so don't hold that against me. First thing we got to do, if you have a solo 401k, you sure kind of know if you have that. This is not an IRA. This is actually a 401k plan. It's just a solo plan because there's no full-time employees other than yourself or a spouse or a business owner. So the first requirement in order to determine if you have to file the Form 5500 EZ is, do you have more than $250,000 in your plan as of 12/31? So it's $250, not $250, $250,000, and it's a good thing. I have a lot of clients that say, well, Adam, I'm kind of close. What should I do? File the Form 5500 EZ. There's no truth to filing this form is going to trigger audits. Okay, that's just blasphemy. It's not true. So if you're close, if you got 246, 239, file it. Okay, why? We'll get to this in several minutes, but the penalties starting in 2020 for failure to file can go up as high as $150,000. Okay, I'm going to repeat that. If you don't file and you're required to, the IRS penalties can travel as high as $150,000. So why take the chance? It's not worth it. File the form, and you're going to see how easy the form is. It's actually the form the IRS got right. When they titled the Form 5500 EZ, it's easy. It really is easy, and we're going to show you how to do it. So if you're close, file it. It's fair market value of assets as of 12/31. It's not what you paid for the assets. It's what they're worth, right? So if you have cash, pretty easy to determine what value of cash is. Cash is cash. If you have stocks, it's not what you paid for the stocks. It's not the basis, but it's the fair market value as of 12/31. If it's real estate, same process, fair market value as of 12/31. If it's private placements, Reg D private investments, cryptocurrencies, gold, value as of 12/31. If you're close, please, 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 please file. Okay? There's 150,000 reasons to not screw up, so just file. And the nice thing about the 5500 EZ is it's paper, so you can file it in paper format. You can also file it now electronically. This is the first year that you're able to file it electronically. And if you need to file it by paper, you can do it, and the address is right here on Department of Treasury, Internal Revenue Service, Ogden, Utah, so you can send it there. If you need to file it electronically, you can do so. Now it's the first year you can do that, doing the EFAST 2, and you can do that. Just remember, you're not going to have to complete all the relevant questions, or all the questions, only complete the relevant ones, because the 5500 EFAST 2 is for the short form. It's really for people that have employees. So just be careful. Here's a list of the questions that you're going to need to answer. Part 1, line A, B, and C. Part 2, line 1A to 5B. 5D2 and 5E. Part 3, 7A, 7C, 8A. Part 4, 9A, Part 5, line 10G, Part 6, line 11 to 12E. So just be careful, make sure you're answering the questions that are relevant to the solo 401k, but you can also just file paper, okay? One other thing, it's due July 31. So it's July 22 today. If you don't think you're going to be able to file it on time because you're not sure what your contributions are going to be, you don't have enough time, you're busy, you're on vacation, you're on a beach, you're playing golf, you're hiking, or doing whatever you want to do this summer, no problem. File an extension. Form 5558. Okay, you got to file that, send that in. You don't attach that to the EZ. It's a separate form that you need to file. There's nothing wrong with filing extensions. I get this question a lot. Adam, if I file an extension, is it going to trigger an audit? No, it won't trigger an audit. File the extension. If you're close, you're not sure you're going to complete it, file an extension. Okay, so just listen, please. I've seen nightmare scenarios where people miss and they're a month, 2 months late, and they have to pay thousands of dollars in penalties, and it's a problem. So if you're not sure you're going to file it, I get this a lot, and we'll get to this point when we're dealing with contributions. But generally, employer contributions are due when your employer, when the company return is due. A lot of small businesses file extensions. So the company return may not be due to September 15th or October 15th, and this form is due July 31. So what do? You're not going to know what your employer contributions are because your accountant's doing all the work. He or she may be on vacation or hasn't got around to your file yet. You're not sure what your employer contributions are going to do. What should you do? File an extension. It gives you till October 15th to complete the 5500 EZ, and by that time you're going to need to know what your contribution number is because your employer return is due. So now everything kind of equals out, and you can file your extension and then file the 5500 EZ at the same time you file your tax return and you're in business. So please, that's my suggestion. File the extension if you're not going to file it. If you're unsure of your contribution amounts, if you're unsure of value, file the extension. Super, super important, okay? So again, here's some filing tips if you're doing it in paper. They don't want you to use felt tip pens, for whatever reason. Do not use arrows or make notes. Do not include schedules, things like that. You need to use official printed paper, Form 5500 EZ. You can get it online. There'll be a link in our comments. You can get it there as well. And just send that in. Don't make up your own form. That's basically what they're saying. So let's go to the form. Okay, let's start and have some fun with the form. The form's actually pretty easy to deal with. Okay, first part of the form, you want to make sure that you are in the right form. So top right corner, 2020. If you somehow can't find the 2020 form, you're using a 2019 form, it's okay. Just where it says for the calendar year plan, in that first line, just put 2020 there. Okay, even though we're in 2021, you're filing this for the 2020 plan year. Okay, so then we're in Part A, Section 1. And then just answer the questions. Is this a new plan? Is it the final plan year, right? Is this an amended return? Sometimes you may have to amend your return. Is it a short plan year? So in most cases, either if this is the first plan year because you just set up your solo K in 2020, you're going to check that box. If it's your final year because you closed the plan last year, you're going to check that box. If you're amending this return for a previous year or for the same year, you just filed it too early and you made some mistakes, just check that box. Okay, that's really it. You're giving guidance to the IRS in terms of the context of the form. So now if you look at Part 1, and I'm just reading the form with you. So if you look at B, you have to indicate if you are filing under an extension of time, right? Is it for a foreign plan, which really doesn't come into play a lot? And is this part of the IRS late filer penalty relief program, where this is where you enter into an IRS late relief program where you screwed up, you didn't file the 5500 EZ because you forgot to listen to my video or watch my video or listen to my podcast, and now you're watching this and it's 6 or 8 months too late, or 2 years, 3 years too late, and now you got to make your problem go away and file in a return. So you check that you are filing as part of your a relief program, which is something you would enter into with the IRS to minimize any late filing penalties, those $150,000 penalties, because there is a late relief program that you can voluntarily enter into, and you can reduce your penalties substantially down to under $1,000, but you can't do it, you can only do it, I should say, before the IRS gets you. So if the IRS audits you, it's too late. You can't get into this voluntary relief program, and they're going to nail you. But if you figure out you made a mistake and you enter into this relief program before you get under audit by the IRS, then you can reduce your penalty. So that's the whole idea of, hey, if you screwed up, it's best that you come clean quick before the IRS ever audits you. So that's part one. Most people, again, if it's not a first plan year or a final year, you're going to check nothing. And generally, if it's not an extension of time, you're going to just go right to part two. So let's jump into part two. Name of your plan, right? You should know your name of your plan. I'll go back to my presentation. The name of the plan is going to be on your adoption agreement. It's also going to be on your plan summary description. So it's something that you will be able to locate pretty easily. If you can't, generally you want to talk to your plan document sponsor, your third-party administrator. If you are a client of IRA Financial, just let us know. We'll give you all the info. In fact, we are happily here to review any 5500 easy forms for our clients. We also file forms. If you're in our advanced compliance program, we'll actually file these forms for you. So, name of plan is pretty simple. The 3-digit code that will also be in the adoption agreement or plan summary. It's generally 001. Now it could be 002 or 003 if there's a succession plan, if this is a succession plan to an earlier plan, but in the most cases, you're going to have 001. Now you're going to do date plan first payment became effective. That's in box 1C. And in box 1C, that's again going to be on your adoption agreement or your plan summary. It's basically the year you started the plan. Most plans get backdated to the first of the year. So if you started this plan in 2019, it's generally going to be 1/1/19. But just check out your docs. If you have questions, you can talk to us if you're a client of IRA Financial, or talk to your plan administrator. Employer's name. Pretty simple, right? You know what your business is called. If it's a sole proprietor, it could be your name. You could put a DBA if you wish, where it says a care of name. But generally, if it's a sole proprietor, you're going to put your name. If it's an LLC, you put the name of your LLC. If it's a corporation, put the name of your corp, so on and so forth. Not that complicated. Now your employer identification number, right? That's your tax ID number. Now what happens if you don't have a tax ID number? What happens if you're a sole proprietor? Well, you're going to need to get a tax ID number. If you want to file, or if you need to file the IRS Form 5500EZ, again, you have more than $250,000 as of 12/31/2020, and you're a sole proprietor. Let's say it's Adam Bergman, and I have a consulting company, and I use my social on a Schedule C. I still, for purposes of this form, I need to get a tax ID number. So again, there's no cost. You go on the IRS website. If you just Google IRS and EIN, just make sure you're clicking on the IRS website and not a for-fee type website. And you just go through the steps and type in your type of entity, your name, or the entity name, your social, answer a few questions, say you're doing it for banking purposes, and they'll spit out a tax ID number at the end of the process. Generally, it doesn't take more than a couple minutes, and then you can use that tax ID number for purposes of the Form 5500EZ. You can use your trade name or business, right? Let's say it's Adam Bergman Consulting, or it's Adam Bergman as the sole proprietor, but I do business as, whatever, AB, the Great Consulting. You can do that for your trade name. Just going to toggle back to the form. So once you do, if you don't have a trade name, obviously just skip it, right? You put your phone number in, put your cell phone, whatever. Your mailing address, business code. So you just go to the instructions. So you Google IRS Form 5500 Easy Instructions, and there are a whole slew of codes. You just basically type in what you do, whether it's real estate or consulting, manufacturing, law, whatever, and you'll find a code and just put it in. It's there for the IRS to just have data in terms of what types of industries and companies are setting up 401ks. It's just informational gathering for the IRS. There's no right or wrong for the codes. If you can't find something that's right on point, just get something that's close, and it's fine, right? It's just really for their purposes. And then put obviously your city, town, state. You can figure that out. Not a big deal. And that's it for section 2. So again, pretty simple. Section 1, just some info on your plan. Section 2 is your business name and address, phone number, tax ID number, things like that. So section 3A is your plan administrator name. Okay, generally the plan administrator will be the company. Generally they don't want an individual to be the plan administrator. Okay, so in most cases, if let's say your company is ABC LLC, ABC LLC will be the plan administrator. You'll use the same tax ID number that you use for your LLC to complete the section for the plan administrator EIN. Now again, let's say it's a sole proprietor, it's Adam Bergman. I don't have a tax ID number, I use my social. Well, now I had to get a tax ID number for purposes of section 2. So now I will use that same tax ID number in section 3. Now I can just write same for all these boxes. You don't have to re-enter all this information if you don't want to, but you could if you wish. It's really up to you, no right or wrong, okay? So it's pretty simple. In most cases, you're just gonna write same, because the administrator is generally the business. For solo 401ks, there's generally no third parties. You just kind of administer it yourself. IRA Financial would be the document sponsor. We sponsor the documents and are responsible for the documents, but we're not the administrator. We can do record keeping, but you, the LLC, the corporation, the adopting employer, would be the administrator of your 401k. So there you go. That's section 3. So let's move on to section 4. Section 4 is, again, pretty simple. Just says if the employer's name, the employer's EIN, or the plan name has changed since the last return, let us know. Again, this isn't common, but it could happen, right? You can change your business name. It could be a change of control, merger, things like that. So that's where section 4 would come into play. It doesn't really occur very often, but if you are in a situation where you change the name of your company, then just enter in the updated information in section 4. Now we go to section 5, which is more fun, I think. So it's pretty simple stuff, right? Number of participants in the beginning of the year, generally it's 1. It can go to 3, 4, 5, I guess, right? You can have a situation where it's 4 owners, Adam, Joe, Jane, and Jen, and we all own 25% of an LLC. We're a consulting firm. We have no non-owner employees, so we are not subject to ERISA, and we are eligible for a solo K. We have plan assets in over 250, and this is an important point. If you have multiple people in your plan, when you are looking at the $250,000 threshold requirement, it's in the aggregate. So it's for all participants. It's not just for one participant. It's for all participants. So if Jen has 200 and Adam has 30 and Jane has 20 and Jim has 100, we're over 250. Even though individually we may not all be over 250, it's a plan return. It's not an individual participant return, it's a plan return. So just like Apple, right, or Google, they may have 40,000 employees. They don't file 40,000 5500s. They file one 5500 for all their participants. They don't even have to put in, every participant's information. They would just put aggregate amounts. So let's go back to section 5. Whether you have 1, 2, 4, 8. How do you have 8? Well, you can have 8 partners, or you can have 4 partners and 4 spouses of the partners. Remember, spouses are not deemed employees for purposes of 55 100 filings, and also for purposes of the solo 401k rule. So you can have a situation where it's Adam and my spouse, and again, both are employees of the business. My spouse is not an owner, but because my spouse is not deemed an employee as per ERISA, it's not going to trigger ERISA, and she can now be part of this solo 401k. So if in that case, I would put two participants, me and my spouse. So you would say, what's the participants in the beginning of the year? What's the participants at the end of the year? Okay? And active participants, same thing, right? You can have a participant, let's say, that maybe started but wasn't active because they went on leave or they were under 1,000 hours this year. So in most cases, that's not going to occur. Most cases, you're going to just see, one, or 2, or 4. It's rare that you see different numbers for participants and active. It generally doesn't happen. So if you're completing the form, you started at 1, you end at 1, meaning it's just you, or it's just you and partner, 2. You're going to complete A1, A2, B1, B2, all at the same. And again, you'd have to include anyone that was terminated in C. So that's section 5. The IRS just wants to know how many people are in this plan. That's their goal. They want to gather information on that. So let's go back to financial information. This is probably the area that gets the most questions. Section 6. So I'm going to kind of go back and forth between the form and my presentation. So if you look at section 6, it should be easy, right? It says, what are the total plan assets? And it says in the beginning of the year and at the end of the year. So if you look at the instructions in section 6, for section 6A1, beginning of the year, it says specifically, do not include contributions. So for example, let's say at the beginning of the year, I've had my plan for 5 years. So my beginning of the year, let's say this year started at 300, and I bought Bitcoin, and now at the end of the year, end of 2020, it was worth 400. Okay, but I also made $30,000 in contributions. So my fair market value of my assets in the beginning of the year was 300. At the end of the year was 400, plus I made $30,000 in contributions. So my total plan assets at the end of the year is 430. You don't include the contributions at the beginning of the year, but you include them at the end of the year. Now the instructions, I wish they were a little bit clearer, because if you look at the IRS instructions, it says under 6A1, do not include contributions, but then under 6A2, it just says include the plan assets, the total assets. I wish it said plus contributions, because I get into this discussion very often with clients who say, well, what should I do? Should I just put the contributions in section 7, or should I also include them at the end of the year? And just talking to colleagues in the industry, the position we take is that include the contributions at the end of the year, because this way the IRS will get a better snapshot of what your plan assets are. Because cash contributions are clearly assets, and plus if those contributions were invested into stocks or Bitcoin or real estate, it's also a plan asset. But the instructions are clear: do not include contributions at the beginning of the year under 6A1, only include them at the end of the year under 6A2. So just that's something I just wanted to make clear. Section B, if you have total liabilities. Now this is not a mortgage that you take personally. I got this question a lot. Well, I have a home mortgage. What do I do, Adam? Should I include it? No. You don't include any of your personal assets. I just want to be super clear. Only include assets in your 401k, not in your IRA, not in your SEP IRA, in your solo 401k, not in your 401k at your employer if you have a separate employer. This is only for your solo 401k. So let's say another example, I start with beginning of the year 300,000, okay? But I also took a non-recourse loan for 100,000, okay? So, and then let's say I took my 300 plus my $100,000 of a non-recourse loan, so I got 400,000, and I buy a house for 400. So in the beginning of the year, my total plan assets should be 400, right? Because the IRS takes the position that a liability still is included in value. Why? because think about your situation. If you have a house that's worth $500,000, but you only put $100,000 down, if you talk to someone and they say, how much is your house worth? You don't say $100,000. You say $500,000. So the same process here. Total plan assets includes cash plus liability. So you will include it under plan assets. So you'll include the 400. You'll show on line B the 100 of liability, and then you'll net it out to get to 300. So that's how the IRS can keep track, kind of what the values are, what the liabilities are, and what the net amount is. So remember, plan beginning year, you always want to make sure do not include contributions. But in section 2, in the plan end of year, that's where you're going to include any contributions you made, and also you're going to want to have those liabilities, right? Because the liabilities can change. At the beginning of the year, your liability may have been 100, but maybe you paid off $20,000 of the loan, so now your liability is only 80. So again, it's all about the IRS just keeping track of what's going on from a valuation standpoint for your plan. Now, if your numbers are off, and I've seen issues where clients made mistakes, calculating mistakes, don't worry, you're not going to get penalized for that. The key is filing the form. The only way you get penalized is if you don't file the form. If you do file it and there's errors and they send you a letter, they'll let you remedy that. They'll let you correct it without penalty. Okay, so don't worry, this is an information return. The only way you get in trouble is if you do not file this. Okay, so it's super important to remember that when you're looking at beginning of year, end of year, do your best to get the values as close to possible. You don't have to spend $50,000 with Deloitte to get a valuation of your real estate or your private placements. Just get a value that you feel is reasonable and accurate as of 12/31. Beginning of the year does not include contributions. End of the year does. You want to include plan asset liabilities in total plan assets, but also you want to provide it in the liability section. You know, I had a client probably about 5 or 6 years ago, and she bought a home for, and this is actually an interesting situation. So she bought a home for like 200 grand. She got a $150,000 non-recourse loan. Again, remember, it has to be a non-recourse loan because a recourse loan would trigger the prohibited transaction rules. What's a non-recourse loan? A loan you do not personally guarantee, and the only recourse is that the lender can go after the plan. That means non-recourse. There is no personal guarantee. So what happened is this person did not file their 5500 EZ. So they got, why? Because the client said, well, I have under $250,000. IRS said, no, you don't. You actually have over $250,000 because your liability, your loan, is treated as value. And that's why, and again, she got off because they believed that it was an innocent mistake. She filed the form right away. She corrected it. But her point was that, no, liability should not be included as a total plan asset. And the IRS, they told me that example I just mentioned earlier, that, hey, if someone asks you how much your house is worth, you include the mortgage. You don't include just the cash you put in. So liabilities are included as plan assets. You'll net it out in B, and then you'll, or net it out in C, and you'll minus it in B. So included in A, provided in B, and the net amount will be in C. But the total plan assets, the A amount is that $250,000 amount. That's where you have to include any liability as well. So just wanted to provide that. Again, it's important just to make sure that you give the IRS a very accurate snapshot as to the values. Now, let's go to Section 7. Section 7 is where you're going to put the contributions. So you did put it at the end of 6 for total plan assets at the end of the year. You're also going to want to show it specifically in 7. Again, 6 and 7, when you aggregate them, this will give the IRS, they should be able to look at 6 A2 and get an idea of where your total plan assets are, which will include the contributions in Section 7. So contributions, again, employee deferrals, there's a space for it. Employer contributions, the profit sharing, there's a space for it, and you're going to want to include all the information you have. Remember, if you are looking for the numbers, this is not 2021, this is 2020. So the employee deferrals were 19.5 and 26 if you're over 50. Then you do the 20% if you're a sole proprietor or single member LLC, 25% if you're a guaranteed payment C or S Corp, up to an aggregate of 57 or 63.5 if you're over 50. 2021 numbers are 58 and 64.5. But remember, you're filing this form for last year. So don't put 58 or 64.5, put 57 or 63.5 as the max. Now, this is important. Remember I was mentioning that, hey, filing extensions are important. I get this, I actually got this question like 5 times this week already. So from multiple clients say, Adam, listen, I filed an extension for my corporation. I'm not sure what my profit sharing is going to be, but I want to file a 5500 EZ by July 31 because I don't want to file an extension. I have all the information ready, I just don't want to have any issues with the IRS. So the problem is, what do? Well, my suggestion is file the extension. Why? Because you want to equalize everything. The extension will allow you to have a situation where your employer contributions that you make for your company, because it's due either September 15th or October 15th, is also reflected on your 5500 EZ. If you file the 5500 EZ in July 31, but haven't made your employer contributions, now you got to do them in the next year, which is going to throw everything off because you're always going to be a year behind. So when you file your 2021 in 2022, you're going to have your 2020 contributions employer, so you'll always be off. And if you ever want to correct them, you'll be in a situation where your employer contributions exceed the maximum amount because you're now including for 2 years. So again, what I suggest, file the extension. If you don't know what your employer contributions will be by July 31, file the 5500 EZ extension, and then this way, when you file the form by October 15th, at that point your employer, your business will have to file the tax return, and this way you'll know what the contributions are, so you'll be able to file it as well. That's just something that I suggest you do. I've seen problems where the 5500 EZ is filed on July 31 and the company goes into extension. The 5500 EZ does not include the contribution amount, and the now the numbers are off because the following year is going to include the previous year contributions, and things get out of whack. So just file an extension. It doesn't trigger any audits. It's important that you file the extension if you don't know what the employer contribution numbers will be. If you do know what they will be, then no problem. Just file the form by July 31. But in a lot of cases, small businesses will file an extension. They're not sure what they're going to do from a contribution standpoint. They want to look at talk to their accountant in terms of deductions, what they can do, what they want to do, cash flow, and that generally doesn't happen maybe until August or September or October. So in that case, it's going to be important that they file the 5500 EZ extension, and then at that point, everything will be in line. So let's now go to Section 8. Section 8 are plan characteristics, and this is something you need to just provide IRS details in terms of the characteristics, what your plan satisfies. The more common ones are 2E as in Edward, 2J as in Jen, 3B as in boy, 3D as in David. If you have a brokerage account, you would use 2Rs in Richard. And if you are part of a control group, meaning this 5500 EZ is going to represent multiple companies you own more than 80% of, you're going to use 3H as in Harry. But those are the codes. You can go through the instructions, see if there's other codes that apply to you, but these are the more common ones. The 2E, 2J, 3B, 3D. If you have a brokerage account, 2R, and if you are part of a control group, meaning you have 2 or more businesses, you own 80% of or more, and you're using one 5500 EZ for all your control group businesses, you're going to do the 3H. And that honestly is kind of the whole form. Section 9 is if you did a loan. So if you did a loan, you would provide the IRS with information on the loan. Okay, you would say yes, and that's kind of it. You kind of let the IRS what the loan amount is. That's as simple as that. 10, 10A, and 11 are always no, because we're not part of any defined minimum balance plan, minimum required contribution. It's not going to apply to the solo 401ks. So you're going to select a no for 10 and 11. And that's it, really. So one last thing on 9, you just have to include the amount of the outstanding loan as of the end of the year. That's still remaining. 10 and 10A, 11 are always no, so don't even worry about it. You can enter NA, no. And sign it, okay, and date it, print your name, date it before July 31 or before the extension date, and send it in. And you want to mail it before July 31 if you file an extension. You want to mail it before October 15th. And again, if you're close, file it. 150,000 reasons why you need to file it. The penalties are severe. The old law used to be $25 a day up to $15,000 max. Okay? The new law is $250 a day up to $150,000. So this is big stuff. Don't mess around. If you're at 242, 236, I would file it. It doesn't trigger an audit. There's nothing wrong. I hope all my clients file it at some points, because that means you have more than $250,000 in your plan. So that's the goal. But file it. The penalties are too significant to mess around. So please, please file it. Some tips to remember: July 31, do an extension. You can file the extension by hand. Make sure you include liabilities as part of the 250. Make sure Section 6, end of year, you include contributions. Remember, Section 7, it's contributions for 2020, not for 2021. Do not include any personal assets, IRA assets. This is only solo 401k assets. Do not include any assets for your IRAs or anything, personal mortgages, things like that. Just focus on your solo K. If you're part of a control group, meaning you have 2 or more businesses you own more than 80% of, make sure you indicate 3H, and then include the values for all the businesses, all the contributions on this form. Again, it can't go over the 57 or the 63.5, but you want to make sure you're including it in. If you have to file an extension, do it. You got to file the form by July 31. Form 5558, you can go online, Google 5558, just complete it, takes 2 minutes, and send it in. Don't wait till after July 31 to send it in before July 31, super important. And again, the big thing is this is super easy, there's nothing to be scared about. We're here to help if you need and have questions, but please, 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 please file, even if you don't think, even if you're close. Now, if you have 50,000, you don't need to file it. If you have 150, you don't need to file it. But once you're over the 2s and you're dealing with illiquid assets, alternative assets, maybe real estate, private placements, I would file it because you don't want the IRS to come back and say, hey, your valuations were off. We think your values were over 250, and now we think you owe us $150,000 in late penalties. So thank you very much. No. If you're over 200 and you have illiquid assets, file it. If everything's liquid, meaning stocks, cryptos, things that trade, and it's clear what the valuations are, then I wouldn't file it unless I was like in the 230s or 240s. Now, another thing, if you file it this year and you go under 250 next year, file it again. Okay, I get this question a lot. Why? Because you're going to get audited. Guarantee you're going to get a letter. So let's say I have my values at 260 this year, and then Bitcoin crashes, God forbid, but it crashes, and now my 250 is worth 150. Guess what? I'd file the 5,500 easy anyways. I've seen this happen, and you're going to get a letter in the mail guaranteed if you are in a situation where you filed it and you stop. Unless your form indicates on the first line that it's a final return, if it doesn't indicate a final return and you stop filing, you're getting a letter, guaranteed, guaranteed. And you're now going to have to ask and answer why you stopped filing. So you could say, yeah, I'm under the 250, and that's fine, that could go away. But who wants to deal with it? Who wants to deal with any IRS scrutiny, dealing with letters and correspondences? It's annoying, it can cost money if you have to hire an accountant. It's a pain. So my suggestion is file it. So again, you're over 250, but now you're under 250 because your assets dropped or you did a rollover or whatever. Keep filing it. Even if you're at 50 or 80, file. And then if you do close the plan, make sure you check on the top under Section A that it's a final return for the plan. Because that will tell the IRS to stop bothering you, to stop harassing you if you stop filing the 5500. If you don't check that box and you stop filing, you're getting a letter in the mail guaranteed. Okay? So this is all about kind of tips to help you complete this form, stay out of trouble, stay out of penalties, and get to the point where you're not going to have to worry about this. This is fun stuff. This is a retirement plan. You should be able to watch your money grow. You shouldn't be in a situation where you're stressed or dealing with any IRS scrutiny. Your plan, if you're a client of IRA Financial, your plan's been pre-approved by the IRS. You have an IRS opinion letter. So you don't have to worry about your plan being audited or any of that nonsense. So just file the 5500 easy if you're close. Remember to include liabilities under plan assets. Also remember, again, if you drop under the 250, please continue to file the easy, because I don't want you in a situation where you're going to have to correspond with the IRS. Otherwise, that's it. Remember the extension, if you can't file this. I also strongly suggest doing an extension if you don't know the contribution numbers, if you don't know the valuation numbers, extend. And again, the big example, probably most popular reason why is if you aren't sure what your employer contributions are going to be because your accountant hasn't gone through your return and hasn't been able to finalize it, file the 5500 easy extension on July 31. So when you file it on October 15th, your return will already be done, so you'll know exactly what that number is, and then your return and the easy will match up, and you're not going to have any IRS issues. So there you go. I think that is it. So again, if you have questions, you let us know. If you're a client of IRA Financial, we're here to help. File it by July 31. Do the extension if you're not going to be able to do it. You have the opportunity this year to file it electronically under eFast 2, but remember, there's only parts you need to complete. You don't have to complete all of the 5500 SF because you're not an ERISA plan. Otherwise, that's it. Just file it. If you make mistakes, it could be corrected. You can remedy it. You can't remedy if you fail to file. If you haven't filed and you're watching this video and you're like, oh no, I'm in trouble, contact us. We can get you into the corrective, the IRS Voluntary Corrective Program. This way you'll reduce your penalties considerably, because if you wait until you're audited, you can't get into that Voluntary Corrective Program, and now you're potentially dealing with up to $150,000 of penalties. Generally, if you don't file the 5500 EZ, there's no statute that runs, right? That 3-year statute generally may not run, although some people take the position it could run. Either way, why mess around? Why deal with $150,000? File the form. It should not take you more than 5 minutes. It is really easy. This is the form the IRS got right. So there you go. Thank you for watching. If you're a client of IRA Financial, we'd love to hear from you. We're here to help. If you're not a client of IRA Financial and have questions, I'm sure we can help you as well. We'd love to educate you and help you with your 401k as well as your 5500 EZ. Thanks again for watching, and take care.